interest income or interest revenue. Understand? Remember our discussion regarding unearned revenue, right? Sorry, not unearned, accrued revenue, which is we perform the services but we are paid later. So this is simple. Interest receivable to interest revenue. So when
Do we have to know those like complicated interest rates, interest formulas that we learned in math?
how we calculate the interest, right?
Do we just use like multiplication, just principal by interest by time, or do we have to use like other formulas?
Simple. You can use different method as well if you can find out. For example, principal multiply. Yeah, interest rate should be here. 9% multiply by 1/3 as well. 1/4, right? September to December, which is 4/12. Answer is the same. Simple. It's a simple method. That's it. So how we are going to show it on balance sheet? Simple. Interest receivable and not receivable revenue is on income statement. It's going to be added in sales 30. That's it. Here we go. Now on 28th of February, now you need to receive. You are a bank. You need to receive those instrument of promissory note. So that would be, so on your balance sheet, 1030 is already there. And now you are receiving that one. So you will receive, how much you receive the cash? So from 1st January to 28th Feb, there are 2 months. So 2 months interest going to be $15, right? I think they already mentioned it here. Yes, $15. So you are receiving the total payments, principal plus the total amount. 15 is total amount is 45, but this 30 is already here on interest receivable. So you will be receiving cash $1,045, and you will delete this account receivable. So account receivable decrease. Account receivable decrease means credit. You will also delete this interest receivable. So interest receivable decrease means credit, and the interest revenue today at this 28th of February is 15. Basically, this note receivable is touching two accounting periods. So that's why we segregated it interest rate. Because on 30th of December, we need to close down our statements. So on 31st of December, how much interest is accrued? 30. So we created this account, and now we are deleting this account by means of accounting, which is previously we made it as a debit, and now we are making it as a credit. Okay. So accounting for note receivable, number one, rates are usually expressed in annual percentages. Remember, this 9% doesn't mean that you are given 9% for 6 months. It means 9% for a year. If for 6 months, if you are using that, then multiply this 6/12. That's it. Unless the question specifically mentioned that this 9% is only for 6 months. Otherwise, generally it is, if you want to use it for daily purposes, then 6 months means how many days in 6 months? 180 days divided by 365 for daily as well, right? You can just find out per day or per month interest rate as well. Just multiply by the appropriate proportion. That's it. So the second last, maybe our objective is, that is show how to speed up cash flow from receivables. So there are some strategies to shorten the credit cycles. So remember that the aging shows that the longer the period, more, so the highest chances of default here is the longer period. So it's better to collect your money as soon as possible. So there are some strategies. Number one, sales discount. You ask your customers, if you pay us so this 210 net 30 means if you pay us in 10 days, we will give you 2% discount. Otherwise, the net amount gonna be paid in 30 days. So if your customer is, he need to pay you 1,000 and you give him this ratio 210 net 30, it means you remind your customer, if you pay us in 10 days, we are going to give you 2% discount. It means you need to pay us $980. Otherwise, this $1,000 you need to pay us in 30 days. So of course, the customer want to avail this 2% discount, so he will pay you within this 10 days. Second, interest on past due customer accounts. Effective credit and collection procedures, emphasize credit card and bank payment. So remind that if you pay us more than 30 days, we will charge, for example, 4% interest on overdue payments. So this also discourages the customers to pay you late. Number three, effective credit and collection procedures. You make a nice procedure. For example, you can say that, okay, you can directly submit to our bank accounts. You can have online payments, right? Plus, you can also encourage that you can also pay us through bank cards, debit cards, or credit cards as well. You can also allow some kind of discount. If you pay us on credit card, we are going to give you discount as well, right? So remember, it is for an accountant or for a manager, it is, the smart management is that do not give this period to your customers, longer period to your customer, because longer periods come with higher probability of default or uncollectible or bad debts. So it's better to shorten this credit cycle so that you receive your cash flows early and you can plan accordingly. So credit card and bank card sales, just need some entries and that's it. So just let's read the illustration here. That is, Apple Corporation sells a computer and peripherals devices for $5,000 at one of its stores. The customer pays with a Visa card. Visa card charges 2% processing fees. So what is the fee? 2% processing fee, 5,000 multiplied by 2%, 100. So you receive cash 5,000 or less than 5,000. So Visa card gonna deduct 100 from your amount and give you rest of the thing. Here we go. You receive cash 4,900. The expense is gonna be the Visa card charges or discount charges, and sales gonna be 5,000. Simple. Entry is gonna be simple. That's it. And now another terminology that is very, very much popular these days is called factoring, which means selling your accounts receivable. If you have $1 million of accounts receivable, so there are different companies, collection companies. You call them and you told them, okay, look, we need money right now. Give us $900,000, and you can take our $1 million account receivable. So you sell your account receivable to third party. So you sell your account receivable to a third party, and now this third party is dealing with your customers. So all the amount, if they receive more than 9,000, that is their own profit, right? So factoring always done with a discount factor. The company can also say that give us 800,000 right now, and you can maximum collect up to 1 million. That's it. So they contact with you and they say that okay, you need to pay us, just like that. The benefits company with immediate receipts of cash, you receive immediately 800,000. You can have your planned, purchase or whatsoever. So it is expensive and loss of control over collection period as well. Expensive, yes, because you are leaving 200,000 as well. So this method is used by companies who have a weak credit history or who have insufficient credit history with their customers, or that company who is in significant amount of debt. So that's why in order to pay their debt, otherwise the creditor is going to sue the company and go for bankruptcy as well. So it's better to sell their accounts receivable to some third party and receive immediate cash and to fulfill their obligations. So entry going to be, to illustrate that, suppose the company wishes to speed up the cash flow and therefore sells 100,000 of the accounts and receiving 95,000 cash. So what would be the entry? Cash, they receive 95,000, cash to financing expense to simple accounts receivable. Right? So whatever you receive, you write it down here, and the difference is called your expense, whether it is credit card fees, whether this is financing fees, whatsoever. Simple. And regarding this liquidity ratios, this is a concept of finance. We are not going to deal with this. I'm just going to show you that we can also speed up through financial techniques, asset test ratio, day sales outstanding. So we are not going to deal with that one. Just remember that. Take our lecture towards the factoring stuff. This is more finance stuff. So we are not going to deal with this ratio stuff and formulas. So that's the end of our lecture. If you have any question, please do write us in our WeChat account, or you can post it in our Blackboard discussion board as well. So I'm going to be uploading this chapter assignment as well. Forgot to write it down the assignment section here. So I'm going to be uploading the assignment regarding the account receivable, and the due date is next lecture. Right? Any questions?
If we have questions on the assignments, I just figured practice would be the best thing for me.
Let me just pause. Then we discuss.
Can we like fill it? Say again?